Welcome to the deep dive. We're here to unpack complex information, really try to give you the clearest insights possible. And today we're taking a really fascinating look at the evolving legislative landscape around digital assets. We're focusing specifically on some recent moves happening down in Arizona. We've got quite a stack here, legislative excerpts, summaries of bills, even governor's veto letters. So our mission today is to distill what Arizona is actually doing with Bitcoin and other cryptocurrencies. We want to understand the different approaches, why some bills pass, and why others face the chopping block. You should walk away understanding the nuances of digital asset policy, the state's financial strategy, and, well, what this might mean for broader crypto adoption.
Yeah, it's really compelling, isn't it? How one state is actively navigating both the opportunities and the challenges, trying to integrate these new technologies like Bitcoin right into their existing financial and legal frameworks. We'll be looking at a few key pieces of legislation today, and they reveal, I think, a very carefully considered approach. It's about balancing innovation with fiscal prudence.
Okay, let's unpack this then. Arizona has been particularly busy. I mean, looking at multiple crypto bills, it's a real sign, isn't it, of how states are grappling with the rise of digital assets.
Indeed, and it raises a really important question. How do states manage something as dynamic and, frankly, as volatile as cryptocurrency? Within their existing structures. Arizona gives us a very practical case study here.
All right, so first up, let's talk about House Bill 2324. This one had a bit of a dramatic journey. It was actually voted down in the House on May 7th. Looked like it was done for.
Right, but then it got a second chance. And this is where it gets really interesting, legislatively speaking. The Senate voted pretty narrowly, 16-14, in favor of a motion to reconsider the bill. This was on a Thursday. And that sent it back to the House for another look. What's fascinating is that only a legislator who initially voted against the bill can file that kind of motion. And in this case, it was Republican Senator Jane Champ. A tactical move, really.
Interesting. And the vote in the Senate, you said it was almost entirely along party lines.
Almost entirely, yeah. Just one Republican, Jake Hoffman, voted against bringing it back.
Okay, so what exactly does HB 2324 propose to do? Why the drama?
Well, connecting it to the bigger picture, HB 2324 is about creating a specific fund. It's called the Bitcoin and Digital Assets Reserve Fund, and its purpose is to manage forfeited digital assets, things seized in criminal cases. The bill, which was sponsored by Republican Senator Jeff Winninger, it would also expand Arizona's forfeiture laws to explicitly include digital assets.
Forfeited assets. Okay, so what happens to those assets if this bill actually passes the House this time around? It needs a majority, right? 60 members.
Yeah, it needs that majority. And if it passes, the first $300,000 worth of digital assets from a criminal forfeiture would go straight to the Attorney General's office.
Okay.
Anything over that $300,000 threshold gets split. It'd be 50% to the Attorney General, 25% to the state's general fund, and then 25% into this new Digital Assets Reserve Fund.
Right, so it's funding enforcement, but also the general budget and this new specific fund. And what sort of situations would lead to the state actually seizing these digital assets under this bill?
Well, the bill lays out provisions for seizure, storage, and allocation. It covers assets from individuals who are deceased, deported, have fled the jurisdiction, maybe been granted immunity, or have simply abandoned the property in a criminal context. The state has a burden of proof, though. They have to show there's no known owner, that they made diligent efforts to find one, and that nobody else has come forward with a legal claim. It really shows the state adapting its legal toolkit, for these new kinds of assets.
Okay, so that's forfeited assets. Now let's pivot a bit, because there's another bill, one that did make it all the way, signed into law by Governor Katie Hobbs. That's House Bill 2749, signed on May 7th too, wasn't it?
That's right, same day. And here's the crucial distinction. HB 2749 deals with unclaimed crypto. Think dormant accounts, lost wallets, that sort of thing. Not assets seized in criminal cases. Crucially, it allows the state to keep this unclaimed crypto and set up a Bitcoin reserve fund that specifically won't use any taxpayer money or existing state funds.
Ah, okay. That sounds like a really key difference compared to some other discussions you hear about governments getting into crypto. No taxpayer money at risk.
Exactly. That's the big selling point. And it does more than just hold the assets. It actually permits the state's custodians to stake the crypto.
Stake it, you mean like earning rewards?
Precisely. Lock it up to support the network, earn rewards, or even receive airdrops. Free tokens sometimes distributed to holders. And those rewards, those airdrops, they can then be deposited into this fund Arizona's calling the Bitcoin and Digital Assets Reserve Fund. So it highlights a pretty innovative way to manage these assets,
Yeah.
potentially generate some value without any direct public fund exposure.
That does sound innovative, but as we know, the governor hasn't just been signing bills, she's also used her veto power. She stopped a couple of significant crypto bills, right? Tell us about Senate Bill 2025.
Yes, she drew a very clear line in the sand there. SB 125 proposed creating the Arizona Strategic Bitcoin Reserve Act 2025. This one would have allowed the state treasurer to actually invest state money, up to 10%, in Bitcoin and potentially other cryptocurrencies. Governor Hobbs vetoed that one back on May 2nd.
Okay, investing state money. And what was her reasoning for the veto? It seems quite different from the approach in the bill she did sign.
Very different. Her primary concern, and she stated this in her veto letter, was that retirement funds shouldn't be exposed to what she called untested investments like virtual currency.
Mm-hmm.
It really brings up that fundamental question, doesn't it? Where is the line between embracing innovation and, well, prudent financial management, especially for public funds?
Yeah, that tension is clear. And she vetoed another one too, Senate Bill 1373. Similar reasoning there.
Yes, very similar. She vetoed SB 1373 on May 12th. This one aimed to create yet another fund, a separate digital assets strategic reserve fund. And again, in her veto letter, Governor Hobbs pointed to the current volatility in cryptocurrency markets and said it just doesn't make it a prudent fit for general fund dollars. She also specifically mentioned that she'd already signed legislation referring to HB 2749, the unclaimed property one that lets the state utilize crypto without putting general fund dollars at risk. So consistency in her approach.
So when you look at the bills she signed versus the one she vetoed, what's the big picture here? What strategy emerges?
It suggests a pretty consistent strategy, actually. Arizona seems quite open to dealing with digital assets for very specific purposes, things like managing unclaimed property, like in HB 2749, or managing forfeited assets from criminal cases, as proposed in HB 2324. They're even okay with leveraging these assets for passive income, like through staking, as long as it doesn't involve state funds initially. But the state is drawing a very clear, very firm line against the direct investment of public money, especially retirement funds or general funds, into what they see as volatile cryptocurrency markets.
So it's like, we'll handle crypto if it comes to us passively, but we're not actively buying it with taxpayer dollars.
That sums it up pretty well. It's a risk-averse approach when it comes to direct investment.
Wow, what a deep dive into Arizona's really evolving approach here. We've seen these different angles managing forfeited funds, keeping and staking unclaimed crypto, but then pushing back hard against direct investment. It really highlights the balancing act lawmakers are facing.
Absolutely. And we've seen the governor making these nuanced decisions, signing laws that avoid taxpayer risk while vetoing others that propose direct investment, specifically citing that volatility concern. It just underscores that ongoing tension, doesn't it, between wanting to embrace new tech and the absolute need to ensure financial stability with public money.
So thinking about this whole picture, what really stands out to you from Arizona's Legislative Balancing Act? And maybe more broadly, how might this kind of state-level experimentation, this cautious but engaged approach, influence the national conversation around regulating digital assets? What could it mean down the road? Definitely something to chew on until our next deep dive.